Dear friends, welcome back to my channel. In this video, I am going to share my investment journey in the UK after I moved here from India. This includes how I started investing in UK, what are the various investment accounts in UK and various investment options available to us in the UK, and how I do it as an Indian living in the UK. If you're new here, then my name is Suman and I am an Indian doctor living and working in the UK. In this channel, I share my experience of moving to UK from India and how you can plan your medical career in UK. For those of you who have watched my previous videos on investment, you might know that I invest a significant portion of my portfolio in India. Reason for this being, in the UK, the banks pay very low interest rates in the range of 0.15 to 0.2% in 1 year fixed deposits. Compare this with the fixed deposit rate in India, which is anywhere between 4 to 5%. I started my UK investment in 2017 in the form of a lifetime ISA account to save towards buying my first home in the UK. Subsequently, I started my first UK equity investment in 2020 after the coronavirus related crash of the equity markets world over. Before this, all my equity investments were in India. In this video, I'm going to share my learnings about investing in UK. Before I start, I want to clarify few basic points about investing in UK as a beginner. Number one is you can invest in UK as long as you have a current bank account and you are a legal resident in the UK. You don't necessarily need a British passport or indefinite leave to remain to start investing in UK. Number two, you don't need to be a very rich person or a millionaire to start investing. You can actually start with as low as £100 or even less depending on the investment platform that you are subscribed to. Number three, I'm not a financial advisor or an expert in finance. I'm a doctor. I only consider myself to be an expert in respiratory disease. This video is for information purposes and nothing I'm going to say should be considered a financial advice. But the point I'm trying to make here is you don't have to be an expert in finance to start investing. You need to study and learn about various investment options from books, internet, watching videos like this, and educate yourself and start investing. Trust me, it is not too difficult. There are many ways you can choose to invest, from the most mainstream options like shares, bonds, precious metals like gold, funds, government bonds, UK property market, and the latest entry is cryptocurrency. You also have the option of rather exotic investment avenues like buying farmland, vintage car, wine, and buying artworks. In this video, I'm only going to focus on the mainstream investment avenues like shares, funds, and property. Before you embark on your investment journey, you need to consider three main factors. The first one being your current financial position. You need to clear your interest yielding loans or credit card debts before you even consider starting your investment. Also, you need to keep a saving of 3 to 6 months as emergency expense in your bank account. Number two is decide the goal you are investing for. This could be buying a house, retirement planning, your child's education, and preferably these objectives are at least more than 5 years away. This will help you decide your asset allocation based on your investment horizon. And number three is you need to be sure about your risk tolerance. No investment is risk free and you are putting your money into something you believe will go up in value in the future. But there are no guarantees. You could actually lose your money and you could get back less than what you invested. With investing, the risk and reward go hand in hand. As a general rule of thumb, higher risk investment, including shares, have the potential to give you higher rewards. Low risk investment tend to offer lower rewards. UK house prices always go up, and it is a very popular investment avenue in the UK. You can buy a house and also earn regular income by letting the house. But real estate needs a large investment corpus and it offers less liquidity. It makes sense to buy your own house rather than paying rent if you're living in the UK for long term. This will offer good appreciation of your house price and save on your rents. For the first time buyers in the UK, I would suggest cash lifetime ISA account to save for your deposit towards your first house. I won't go into the details in this video about how to buy a house, but let me know if you want a future video on this in the comment section below. Next is the equity investment or investment in shares. First, you will need to open an investment account, which should be a stocks and shares ISA account with any investment platform based in the UK. In this ISA account, you can invest up to £20,000 per year tax free. Some of the investment platforms in UK are Hargreaves Lansdown, AJ Bell, Interactive Investor, Nutmeg, and many more. All of these have certain advantages and disadvantages. You need to do a thorough research before you decide on the platform of your choice. I have my account with AJ Bell U Invest, which offers me good range of investment options and decent competitive rate for their services. They have an easy to use website interface and also a mobile app. They also offer free subscription of a weekly magazine known as Shares Magazine, which keeps me updated about the latest news in the investment world. I will leave the link of their website so that you can check it out. Once you have an investment account, next step is to decide what to buy. Shares are units of ownership in a company. When you buy shares, you are effectively buying a small stake in the company. If the company is doing good business, then the share prices will go up and investor can make good profit. Companies may also offer dividend, which can boost your return from your investment. However, the company can also make loss, and in that case you will lose your money. So you can make good profit, but there is a risk associated with it and you can lose your money. I don't buy in individual shares because I don't have the time and the knowledge to make informed decision about choosing the individual stocks. So what I do is pay an expert to invest my money in the stock market, and this is also known as buying funds. Funds are ready-made basket of investment. When you invest in funds, you are buying into a mix of assets, which may include shares, property, government bonds, and cash. Funds save you from trying to pick individual investment that you think will perform best. The great thing about funds is you are not putting all your eggs into one basket. Instead, your money goes into a range of investment. This is known as diversification, and it can be an effective method for spreading your risks. That's because if some of the investment in the fund perform badly over a certain period, others may perform well. There are two main types of fund: index fund or passive funds and active funds. An active or multi-asset fund is a fund run by professional fund manager who chooses which shares, bonds or other assets to hold and monitors them on your behalf. You pay extra for the fund manager's expertise with the aim of receiving returns which should ideally outperform the market or the index. Another type of active investment is investment trust, which are a collective investment, that is a range of individual investment chosen and looked after by an investment manager. These are traded in the stock exchange and offer good diversification of your portfolio. An index fund or a passive fund simply tries to track or follow the index of a country, geographical region, or a theme. For example, if you simply track S&P 500, which represents top 500 US companies, including Alphabet, Apple, Facebook, Coca-Cola. And similarly, in UK, you have the index tracking FTSE 100 that includes the top 100 companies of the UK. If you invest in this index, then you actually invest in all these companies of that country. Index fund still have a fund manager, but the charges are quite low as compared to the active funds because the fund manager doesn't need to do a lot of work. We know historically it is really hard to beat the market. Those of you who follow Warren Buffett might already know about this. But remember, past performance is not an indicator of future performance. So for a beginner, index funds are probably the best and cheapest way to invest in the equity market, but make sure you stay invested for long term. In last few years, everyone is so excited about cryptocurrency. This is a new investment option and you must have definitely seen or read about it in various forums. Bitcoin, which is the most popular cryptocurrency, is an extremely volatile investment option. You might consider investing up to 10 to 15% of your portfolio in cryptocurrency assets. Personally, I don't invest my money in cryptocurrency because it is outside the ISA tax relief umbrella in the UK and I don't have any excessive spare cash to invest in crypto. But if I have extra money, I will definitely consider investing in the cryptocurrency in future. To conclude, I would like to stress on the fact that it is possible to invest in UK while working here on a visa, provided you are a legal resident and have an UK bank account. You should have a long-term investment horizon because time in the market is more important than timing the market. You have a risk of losing your money, so you should be sure about your risk tolerance. Start investing in index funds if you are a beginner and move to individual stocks as you get more and more experience. Diversification is extremely important because it can reduce the risk of one investment performing badly. And last but not the least is you should start investment early and start as early as you can because you will have more time to be invested in the market and this will give you the advantage of compounding, which is often referred to as the eighth wonder of the world. If you are also new to investment in the UK, please let me know how you have started investing and what are your preferred investment avenues. And if you're still planning to embark on your investment journey in the UK, then I hope this video will be of some help. Happy investing.